Hello and welcome back to ASX Market Watch. It's really good to have you back, and we're just going to check out 3 different charts today, just to make it very simple. As always, the ASX Top 200, one of my favorite barometers for looking at the market and telling myself which way that I should be trading. Now, I'll also be looking at the FTSE, and I'll also be looking at the Dow Jones, just because, you know, the 3 markets really are quite interrelated. In fact, there's a great book by Ken Fisher called The Wall Street Waltz, which is just a great little course in economics, like a sort of crash course in economics. But in it, he looks at the recessions over the last 150 years. And even without all the, up-to-the-minute news and that sort of thing 150 years ago that we have today, the recessions still happened within 6 months of each other. So it's quite amazing what you can actually see, and the world markets really are linked. Now, all I've done this week is, this is the ASX Top 200. We've just got a simple uptrend line, we've got our steeper uptrend line, and of course we've got our downtrend line as well that we crossed in July 2009. That was the longer term downtrend line. So really, I mean, there's not much to add on last week's Market Watch. Basically, we've still got our solid uptrend line here, so this is providing a lot of support, giving us a lot of, support for the market. So basically, it would have to cross below this longer term trend line for us to turn bearish again, so around the 4100 mark. Now, last week we did say that we were able to flatten our steeper trend line. So this is our steeper trend line, which would give us an early indication of a change in trend. So what we actually were able to do was change the steeper trend line from this position just to this flatter position, because we had a new trough there. And as you can see, the market has really responded to that really well. I mean, again, I just love how these tools work. It's almost like magic. It seems magical at the time, but basically now we've got our flatter trend line here, and the market is still staying well above it. In fact, it is going for our next resistance level. What I've done now is, this is a weekly chart, and last week we did look at these the projected resistance levels that we might come up against. Now, this is a little bit more of an advanced technique, but you can learn about it at asxmarketwatch.com. It's absolutely free to do. What we're looking at is the 38.2 retracement level. It's a Fibonacci level. I use Fibonacci and Gann levels. As I said last week, I don't discriminate. I think they're both great. They're both useful, so why not use them both? But what we're coming up against is that 38.2 level. Now, I have great faith that we are actually going to move past that level, but that's just pure speculation. It hasn't actually done that according to my rules as yet. The reason why I'm faithful that it will go past the 38.2 level is because of this last bar right here. It's basically a bullish up day. Now, a bullish up day is, it starts on its lows and it ends on its highs. Again, I have written about this at asxmarketwatch.com, which is still free to check out. On this bullish up day, it's basically a really strong sign. So it's not like this bar here, for example, which closed well off its highs. This bar is going for the resistance. It's really gunning for it. So I have great faith that we're going to move past it. Again, as I said, it hasn't done it according to my rules yet, so I wouldn't be basing any trades on that. It's pure speculation. But it's fun to speculate every now and again. Now, I hope that has helped you. And as I said last week, the 50% retracement level really is the strongest retracement level. And that one we're looking at, if I could just get it, there we go. It's around the 5,000 mark. Now, 5,000 being a round number, that's a very psychological mark for investors as well. That is going to be a big one, guys. So really, you'll be looking out for a lot of resistance around that level. At least I know I will be. Now, the next one I'd like to look at is the FTSE. Very simple again. All I've done is drawn my downtrend line, drawn my longer term uptrend line, and my shorter term uptrend line. Now, it's really painting a very similar picture to the ASX Top 200. And, I mean, if you have listened to any of the trend line analysis that I've done, there's really not much to say. We've got our longer term uptrend line, and it would really have to close below that for it to become bearish again. Really, this is looking like a very bullish picture. The only thing I'm worried about is the longer term trend line resistance up around the 5,250. So if you look at this, FTSE, and if you look at the ASX top 200, you'll see that they're looking to come up to resistance at around the same time. It won't be the same level because they're different indices, but in around the same time frame, they're looking to. We could do our price projections on the FTSE as well, but really I don't see any point because we still have this longer term trend line resistance hanging overhead. So once it actually gets through that resistance, if it does, then we can start looking at doing price projections just to find out where we might find future resistance. Now lastly, I would like to look at the Dow Jones just quickly again. Again, all I've done is drawn in my shorter term downtrend line, my longer term downtrend line, and my longer term uptrend line and shorter term uptrend line. Now, a lot of people have been talking about the other Dow indicator, which is when the Dow Jones Transport Index does not confirm with the Dow Jones Industrial Average. Now, that can be seen as an early indicator of a trend change, and I think we've actually had that happen in the last couple of days. I don't actually use that indicator. All I do is use trend lines. It's probably the most simple tool, and it really does work for me, so I'd be crazy not to use it. According to trend lines, we haven't had a trend change yet, so really I'm not going to be looking at any other fancy indicators, looking at any divergence or convergence or anything else like that. As simple as it may seem, it's really going to have to cross this trend line, this upper trend line here, and it's going to have to close below the previous trough, which is about 9,050. So if the Dow Jones does not close below 9,050, I would still consider it bullish, and I would still be taking bullish positions in stocks, so long as you get a good entry signal in your stocks, of course. Now you can look at entry signals on ASXmarketwatch.com as well. You can analyze them, an individual stock, in the same manner as we look at the indices here as well. But the reason why I look at the indices is because, as I said before, it's just a great way to determine whether you should be going long or should be going short. For instance, if the market's going up, I really would not recommend going short just because there's too much resistance against your position. They say that 50% of stocks will actually follow the market average, and I think it's actually a bit more. I think it's probably 2 out of 3 or 3 out of 4 closer to will actually follow the overall market, and you'd be crazy not to go with that that flow of momentum, really. Now, I hope this has helped you a lot, and as usual, I'll be back next week. If you want me to look at any individual charts, I'm happy to, absolutely. It's just swing me a line at ASXmarketwatch.com, and yeah, it's as simple as that. So again, the music has started, but it's been great to have you, and hopefully I'll see you next week. Thanks very much. Bye.